stocks. We're going to talk about what stocks are, value versus. But at the end, Illinois Tool, shouldn't that be at 100? I mean, Parker Hannifin, that should be at 100. I mean, Boeing should be at 180. If all this stuff really mattered, United Technologies, we go, hold to sell. The stocks that are doing great are the China stocks. So, I mean, maybe we should just put this whole China thing in a box, stop talking about it, and start talking about companies that are doing well.
Thank you. I mean, right? But you also did say, and I heard it in one of your promos, we did get too complacent. Well, we got complacent in the Salesforces and in the Workdays. The stocks that we just decided they don't have earnings, but they got revs. If they got revs, we're fine. And that's not what this market wants right now. It wants dividends because rates came down. It wants buybacks. It doesn't want stock issuance and it doesn't want no dividend. And that's what's going on right now. And the complacency on the highest multiple. Look at Workday. I mean, good job. About Coupa, I had that on the other day. CrowdStrike, Zscaler. Now, these are companies I have on all the time simply because I want to introduce people to an Okta. I want them to know what they are. What they are stocks that go higher. But now what they are stocks that go lower. And people want Union Pacific. Did anyone read the Union Pacific release today? We're doing badly. The numbers are horrible. Things are down. Carloads are awful. Figure what's down 5? No, it's up 4. Yeah. Value. Zoom. Buyback stock, dividend. So it's a little counterintuitive right now. What is the railroad most levered to China? Union Pacific. And in the meantime, Zscaler has nothing to CrowdStrike, nothing to do with China. It doesn't matter. If anything, they're good because if China's hacking, you hire them. All right. So, Pete, a couple of down days to start the month. Now we got a reasonably big up day, at least at this moment, up 200 on the Dow. What's in store for as we said at the top? We're calling it the final days of the decade. What's going to happen with your money?
Well, we're going to continue to trade, obviously, off everything President Trump says about the trade war. I mean, that's just something that's a given. But I think to Jim's point, what he's pointing out is people definitely are going for quality. Those are the names that are moving to the upside. When we're going to the downside, there's still quality names that are being bought. Matter of fact, yesterday, the one thing that I think got lost in all of this sell-off, we're down 400 points. The pharmaceutical names were trading pretty well. As a matter of fact, biotech was trading really well as well. Biogen, Merck, Pfizer, you're the man. You know what I'm talking about. So, yes, there are quality names, though, out there, Scott. And those are the names you're going after. If they're getting hit on those down days, those are the best opportunities out there. Because to Jim's point, you're looking for those names that have dividend yield. They're buying back stock. And, oh, by the way, they're quality names where they're showing you where their growth is. And they're not complaining about the trade war. They're embracing what they have to do to make themselves better. Oh, my. Can I just tell people to look at AbbVie right now? Look at AbbVie. Yeah. I mean, AbbVie, they just boosted the dividend. AbbVie closing on Allergan, undermanaged company. Now it's going to be with an overmanaged company. It's going to be a fantastic combination and very inexpensive. Yep.
So, look, I'll make this point. The value trade that we were looking at after Labor Day, it got really hot, okay? Backed off in mid-November. It backed off at the exact moment that China said, we want tariffs rolled back, and Trump said, nope, not going to do it, okay? I see that starting to gain speed as tariff rollbacks are back on the table, and maybe we get this phase 1. But I got to be very clear. Look, I'm a value guy. I own some Apple, I own some Google, that's fine. But you're doubting whether value's got the momentum to carry itself into next year? Without phase 1, it doesn't work. Really? It just doesn't work. Look, a stock that you and I are on opposite sides of is Caterpillar, okay? If you look at Caterpillar, as you probably have right now, Jimmy, on the fundamentals, you say, I don't want to own it. No, my chart says we bought it. We flipped it at 143 because they missed the quarter so badly. The CEO was like, hey, I did badly. And the street said, oh, he did well. But the stock is up about... Like Expedia guys, they didn't do well. But, Jimmy, the stock's up about 20% in 3 months. Not on the fundamentals. No. It's up on the basis of a phase 1 deal gets done. Maybe we get the Belt and Road cooking. Maybe other countries, maybe Germany starts priming the pump with fiscal stimulus. That's why it's up. So if you look at that as a classic value play right now, and you don't get phase 1, Caterpillar goes from 141 back to 119. I'm not going to disagree with that. I'm not going to disagree with that. But I would tell you that there are others that seem to be impervious to this thing. Honeywell. I mean, high quality. Right? Yeah. Honeywell, it just does. It's a winner no matter what day. I find that you don't have to look, and we don't have to overthink this. Take a stock like Illinois Toolworks, misses quarter. What does it do each time? Goes higher. Well, it's a little counterintuitive. It's China. It's because we think we're getting phase 1. And it's not really a lot of China. I had PPG on yesterday. Michael McGarry. They had an unbelievable quarter. Why? China. They're making a lot of cars, though. They do that. And also the cans. People don't like plastic anymore. I know you like the plastic. Forget it. What do you Forget it. All right, Megan Shu. I think he's looking at the tie when he says you were right in the middle of that conversation.
I am right in the middle.
Where are you on
what part of it do you want to take?
Well, I think you're going to have a tough stomach with the trade back and forth. I think we're going to continue to have some back and forth. I think there was perhaps a little bit of a consensus that a deal is going to get done. It has to get done. The Trump administration doesn't want that to be the narrative. They want to have some negotiating room. So I think what we've heard in the past couple of days is some posturing. Our base case is still that we get a phase one deal. More importantly is what happens with not necessarily the substance of the deal, but what happens with the tariffs. A tariff rollback would be very positive for cyclicals.
So the idea that you got a lot of your gains this year from multiple expansion because earnings were, next to nowhere, that earnings better come back in 2020 to carry the market higher because it's gone as far as it can go on multiple expansion. You buy that argument this side of the table?
If you buy a bit of a recovery happening,
you better think that things are going to recover. I mean, you better get some level of growth. If you think
Europe
you can get
is where you could get
growth.
Oh, I like that. Post-Brexit.
Yep. If you're looking, look at where the British pound has gone, Scott, as the Brexit talks continue forward and as the Conservative Party continues to gain strength, which is favoring Boris Johnson and his policy. So when you look at that and the British pound moving up versus the dollar, that's showing you that there could be some recovery out of, for instance, the United Kingdom. It could also be out of Germany and the rest of Europe. That's a very strong thing for the companies that have 50, 60, 70% of their sales overseas.
Right.
So to Jim's point, when you see Workday and Zscaler, and I'll throw Slack in, which is going to have earnings tonight.
Yeah.
These are all stocks that have revenue, but they don't have profits.